during the heart of earnings season, the actual quarterly reports sometimes aren't always that important. It drives me crazy. For example, yesterday, a host of cyclical stocks roared higher, even though they recently reported some really ugly numbers. Take Caterpillar. When Cat reported the results, they were hideous. The great machinery company cut its forecast and told a pretty negative story about global economy. Stock was looking down $6 to 129 the morning it reported. It was in free fall. But then it swiftly turned around, and now Cat's at 146. It's breaking out like the quarter was fantastic, when in reality it was anything but. The best thing we got was a commitment to maintain the dividend and the buyback. Thanks. Then there's Union Pacific. This railroad stock initially got slugged when it reported weaker carloads and weaker earnings. This is a fabulous railroad.
All aboard!
But it could be considered hostage to China, hostage to coal, and hostage to oil. All softer end markets. Even if it's become a much better operator than it used to be, doesn't matter. The stocks went up 12 points in 3 days on very little news after really disappointing. That's not supposed to happen. Or how about FedEx? I mean, it doesn't report for a while. Though its stock just rallied $8 yesterday, totally out of nowhere. Didn't give up any of that gain today. Based on what? Trade rumors? Please, these negotiations aren't going anywhere that can specifically help FedEx's growth that is worth 8 points. It makes no sense. It's not just the transports. Chevron reported an extremely light quarter on Friday. Extremely. Look at the headlines. You can see why it needed to buy Anadarko as much as Occidental did. Chevron needed the growth. The stock should have sold off on those disappointing numbers and stayed down, but it only fell a couple of bucks in pre-market trading. Some of these guys, the pajama traders, can't resist banging stocks down. And then it quickly made up its losses. And then yesterday, it rallied more than $5. Not because of anything company specific, but because investors were feeling more bullish about the economy. $5. It was disappointing. And that's all this is. It's a rotation based on the idea that the economy is in better shape than the bears thought. I wish I could come up with something more concrete. I wish I had an explanation that's better. But you know what? I've been doing this for 40 years, and there is no better explanation than what I just gave you. In fact, I'm going to go one step further. I am thinking this rally in the cyclicals is based on vicious ETF buying, where there simply aren't enough sellers materializing to sop up all this sudden demand. These ETFs suck the lifeblood and the liquidity out of the market. The buying is robotic. Real human buyers wouldn't pay up 8 points for FedEx on no news unless they think there's going to be some sort of takeover, which there probably isn't. Real buyers work in order. They wait for sellers to come to them. If humans had been directing these trades, the stocks wouldn't have rallied. I mean, maybe they'd go up a couple of bucks before the buyers would walk away. Instead, these machine buyers, they blitz all the sellers all the way up. And you have to believe they didn't even attempt to try to get a good price for their customers. Unfortunately, this increasingly feels like the new normal on up days. Your first instinct is to say that everyone who wants to sell is sold, and that's why something like FedEx has so little stock for sale, between 156 and 164. But that's just plain wrong. What if the real problem is that the machines can't seem to moderate their own buying? It's like the Terminator. They simply buy stock too fast. Way too fast for the sellers to be able to offer new shares. They can't reload the sellers, or they're not there. Now, I'm often criticized for only caring about these programs when the market goes down. That's complete nonsense, chowderheads who say that. I hate it when stocks go up like this on nothing. It destroys what makes the American market so great. Deep liquidity that leads to real price discovery. It's totally artificial, people. These cyclicals should not have rallied so hard yesterday. It's irrational. If you ask me, this is one of the many reasons why regular individual investors have gotten sick of this whole asset class and don't trust it. They don't want something that can go up 8 points because they know it can go down 8 points. I hate markets that rip higher for no reason. I like markets that give me good prices. Those of you who criticize me for saying I only complain when it's down on the down days, you just don't know anything. Go pound sand. At the end of the day, this stock market is too thin. Everyone knows it. No one lifts a finger to stop it because the big institutions care more about racking up fees than they do about ensuring orderly markets. You know what? The whole darn thing, it's a travesty. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.